Hello, my name is Isaiah Ybarra, and today I'm going to be doing a presentation on federal rates hikes and Inflation Reduction Act, monetary versus fiscal policy. Monetary and fiscal policies are two ways the U.S. fixes the economy. A fiscal policy involves government spending and tax influence in economy's activity, while monetary policy involves controlling the money supply and interest rates to maintain price stability. In this case, my monetary is the Federal Reserve interest rates hikes from March of 2022 through July of 2023. The fiscal policy includes the Inflation Reduction Act that was signed in August of 2022. This was a response to post-COVID-19 inflation. The federal government and Congress tried to fix it in totally different ways. The federal went from the economy's brakes, so trying to slow down the economy, while Congress tried to hit the gas on clean energy. Monetary policy, the federal government raised the federal funds rate 11 times, started near 0% in March of 2022, and ended at 5.25 through 5.50% by July of 2023. So pretty much going from $0, so free money, to 5% in a year. This is a contractionary monetary policy. The goal was to fight inflation that hit up to 9.1% of June of 2022. The impacts of monetary policy. This made borrowing more expensive. Consumption and investment dropped since loans cost more. A shifted aggravated demand left on purpose. A lag hit as it took about a year to see inflation actually fall. And the housing market froze as bank failures such as SVB in March of 2022 and small businesses struggled with loan costs. Meaning that people stopped buying houses and businesses, stopped building new stuff because the loans were not worth it. It slowed down the whole economy. Nobody could sell their house because buyers disappeared. Banks collapsed because of the fast rate hikes. It wasn't smooth at all. And small businesses took the biggest punch as they couldn't rely on loans. Success or not, inflation did drop by 3.4% by December 2023 and 2.9% by December of 2024. No major recession as people thought. They got inflation down without a huge recession. Services inflation stayed sticky, however. Rent and insurance were still high. The Phillips curve trade-off showed unemployed stayed low only because the economy was strong. The Federal was willing to risk all jobs to kill inflation. Basically meaning that they would rather have a recession than let inflation stay at 9%, choosing inflation over jobs. And we move on to the fiscal policy. The Inflation Reduction Act was passed in August of 2022. $400 billion in clean energy tax credits, extended ACA subsides, and allowed Medicare to negotiate drug prices, 15% minimum tax on big corporations, and mixed government spending and tax changes. Biden pretty much had a big bill that was passed without any Republicans voting for it. The main thing was money for solar EVs and batteries, also made insulin $35 for seniors. Them taxed the big companies to pay for. So they spent money, also raised taxes on corporations. That's why they said it wouldn't add that effect much. Impacts on the fiscal policy. On the short run, not much. CBO said it would barely move inflation in 2022 to 2023. In the long run, money went into battery plants, solar, EV factories in 2023 to 2024. Drug price caps helped seniors directly, and insulin was capped at $35 for Medicare. The corporate minimum tax was supposed to offset spending so it wouldn't add and wasn't a normal expansionary fiscal. This was one big part of people right away now. Seniors went from paying $400 for insulin to $35. It was so huge for them. Companies like Amazon will finally pay 15% tax. The money was supposed to pay for the solar credits. And normal stimulus just gives people money to spend. This was trying to make energy cheaper later by building solar now. It was a bet on the future. Success or not, record private investments in clean energy after the bill. Defect was supposed to be dropped by $240 billion over 10 years. Didn't actually reduce inflation in 2022 to 2023. As the name says, people argue whether it was about inflation or just climate spending. It was called Inflation Reduction Act, but really did nothing for 2022 inflation. And a lot of people were just criticizing it as it was just trying to make inflation reduction to make it popular. In conclusion, the federal used a broad tool to cut fast AD. IRA used a narrow tool to build supply and cut cost. Both are happening at the same time and work against each other. Federal was cooling the economy. IRA spending in certain sectors. The federal believed AD was too high and prices were sticky, so they pulled back demand. IRA shows the government picked winners with spending instead of letting the market fix it. Rates hiked hit everyone at once. Your mortgage, credit cards, car loans all went up too fast. It was a blunt tool, but it worked. IRA only helps if you buy solar panels or EV. It's super targeted and takes years, like planting on trees. This is wild. Federal was slamming brakes while Congress was hitting gas on clean energy. They fought each other for a bit. Then the federal thought people were spending too much money, so they made loans expensive to force everyone to relax on buying their loans. Government basically chose EVs and solars to win. They didn't just lower the rates and let the market decide. It was by choice. And this is my works cited. Thank you.